liquid chart. I created with ECN liquid chart. So I want to use the liquid chart is a platform for trading, okay? But I want to use MT5. So I had to create an MT5 account so that I can use MT5. So you can create an MT5 account by going to real accounts and selecting ECN MT5, all right? Or whichever MT5 that you are comfortable with. So right now I have my MT5 account, so please pay attention. I want to log in my MT5 account right now I want to log in my account for my broker to my MT5 account. Now, if you look at the screen, you see login, server, and password. The login details have already been sent to my email the moment I created it. All right. So I will go to my email to check for my login details. I think it's here. Okay. So this is my ECN MT5 account details, the login details. So right now I want to log in my account, my real account in my MT5. Okay. So the first thing I will do is I want to copy my server, liquid market server. So I will go to my MT5 right now, add trading account, search broker. So I pasted my liquid markets server. So I want to connect my broker right now. So you can see the liquid market here. So you select the liquid market. So you can see log in, password. So I'm going to my email back to copy my login. As you can see, copy my login. So paste my login. Then the password, make sure the password is properly copied, because if you add extra space, it's going to count as password. So I will log in. So right now you've seen that the balance that was reflecting, the balance that is reflecting here, 99.98, is now reflecting my MT5. So right now I can place a trade if I want to. All right. So you can see the currency pairs. So this is our trading platform now, our real account. So right now, let's talk about how we can place a trade. All right. We have AUD USD as our first pair. So you can see the green and the red candlesticks. This is my chart right now, and we want to place a trade. The first thing for you to do before you place a trade is to first know what you want to trade. All right, what exactly do you want to trade? The pair that you want to trade, let's assume it's this AUD USD that we want to trade. We run our analysis. Maybe we want to sell or we want to buy. We know our stop loss. That is, if the market goes against us, the area that you want the market to close your loss. We know our take profits. That is, if the market is in our favor, the area that you want the profits to be taken. And of course, we know our entry. So if you want to place your trade, where you will go to is at the bottom, you can see trade. All right. So if you look at the top right, you will see a plus sign. Click the plus sign. So this is the platform for placing your trade. You can see AUD USD, that's Australian dollar versus US dollar. You can see market execution. Let me explain market execution. The market execution means that I want to enter the market at the current price of the market right now. So you can see the current price of the market, 0.6230. So if I'm using market execution, it means I want to enter the market at the current price of the market right now. If I don't want to use market execution, I'll click the drop down. You can see buy limit, you can see sell limits. Now the buy limit means I've analyzed my chart and I'm seeing a potential increase on the pair that I want to trade. But I may not always be on the chart. In case price comes, the broker should initiate my trade at this particular price. All right. That is buy limits. That I want to buy for price to increase in value. Sell limits. I want to sell because I'm expecting price to decrease in value. Now, if you look at the in between the market price and the market execution, you will see 0.01, and at your right you will see 0. Plus 0.01 plus 0.1 and plus 0.5, and at the other side too. This is called the lot size. All right, I will explain the lot size for you, but first let's talk about the pips. Now the pip is the measurement of a movement, okay? The price value, a particular movement of price per time. All right. So it is the smallest price change. If price increase, the instant a price increase, it moved by a pip. The instant the price decrease, it moves by a pip. So let's assume that maybe EU, okay, let's say the AUD USD. All right. What's the price? 0.625. Okay. So let's say AUD USD moves by from 0.6250 to 0.6251. Now the difference between the price movements is known as pip. Okay, so this is one pip movement. All right, from 0.6250 to 0.6251. That is one pip movement. So that is why some traders will say, I caught 50 pips on this trade. It means that the trader caught a 50 pips price difference between his entry and his take profits. So if this is my entry, maybe this is my entry, and I close at 0.6 2, this is 5, 0.6244. All right. So it means that the only thing I caught here is 6 pips. All right. So when you hear the word pip, just know that it is the smallest unit of movement in a currency pair. All right. Now, some of you may say that, but there are 5 decimal figures. There are 5 figures after the decimal, right? That last one, if you see the display here, is at the top. That last one is called the pipette. The pip starts from the second figure after the pipette. All right. So if I want to calculate my pip, for example, let's say EU, that's Euro USD. Let's say it moves from 1.0397, okay, to 1.03860. How do we now determine the pip movement between this price? So let's say maybe this is my entry and this is my stop loss price. All right. And I want to know how many pips is in between. So I'm going to teach you how to calculate your pip. The simplest way to calculate, there are several ways that you can calculate your pips. There are complicated ways that you can calculate your pips, but I'm going to teach you the simplest way so that you will not, the trade will not come to your entry and even hit your TP and you are still calculating. All right. So let's say we have this kind of figure now for EU, 1.03970. All right. Calculating pip is mathematical. For the math students that are here, I'm sure that you're very familiar with this. All right. I'm sure you're very familiar with this. In rounding off decimals, figures after decimal, if we say, now we're talking about this right now, this represents tenths. That's the first figure after the decimal points. Second one represents 100. The third one, 1,000, right? The fourth one, tenths of 1,000, and the fifth one, hundreds of thousands. So we will have in this, if we approximate this or we round it off after the decimal point, so we'll have 1,0,0,0,0. So 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Now, if we say that is 10,000 units after the decimal point, it will be easy for us to calculate the pips using this simple idea. We have 1.03970 and the price change 0.3860. So all you have to do is round here off after the decimal. We have 1,000, 10,000. right? So when we subtract this, we subtract the higher value from the lower value. I mean, the lower value from the higher value. We'll have, let me use my calculator. We'll have 0.0011. Then we will now use the figure that we rounded off after the decimal to multiply it times 10,000. So there we'll have 11. That 11 is the pips. Okay. So even if you have something like 1.233, all you have to do is round this off. That will give us just 100 because we have three figures after the decimal. So it's this that you use to multiply after subtracting your values. Let me do something else for another pair so that you understand better before we move on to lot size. Let's take, for example, okay, let's take for example the AUD itself. No, let's use another pair that have different. Okay, let's use gold. XAU USD. How many figures for gold after the decimal point? Okay, two figures. All right. So let's go to. So let's say the current market price is 2755 point 0.40, and the price change, of course, we always bring the lower value below. Let's say 48.20. Okay, just like I taught you, all you have to do is round this off. That will give us just 10. So you subtract this 2755.40 minus 2748.20. Here we have 7.2 times the 10. All right. So that will give us our 72 pips. It's as simple as that. All you have to do is round off the digits after the decimal points. All right. So having established that, let's talk about the lot size. To talk about our lot size now, we need to have an entry, of course, and we need to have an exit. That's our stop loss and our entry. Very important. Then our take profits. So let's assume we have, let me go to my trading view now. Okay, so let's assume we have gold now, and we want to buy our long tool. We want to buy from 27. You can see the price. from 2712.779. Okay. Our entry is 2712 points. So let me use on that chart because all right. So let's assume we want to buy gold from anywhere. Okay, let's say we want to buy from here. So we need to have our analysis before we can determine our lot size. Okay. So we are buying from here. What is our entry? Our entry is 2724.688. And our stop loss is 2715.586. All right. And our take profit is 2768.65. All right. Right now, this analysis is 1:5. Let's just make it 1:5 so that it will be balanced. I'm sure you guys are already familiar with this. So 1:5. So our take profits figure have changed. 2770.193. All right. So I've already taught you guys how to determine your pips. If you want to know the number of pips between the entry and the stop loss, you can do that. So I will go to my lot size calculator. Okay. Calculating lot size manually is so complicated and it can take your time. So that is why lot size calculator was invented, to make things easier for you, so that your entry will not come and TP hits and you are still calculating lot size. All right. That's why I use this lot size calculator. It makes it easier for me. And sometimes I even use because of the pair that I trade, I already know the lot size to use per time and how much my loss will be. So sometimes I don't even use this platform. But for you, you need to practice and you need to get used to it. So let's say our account balance is $8,000, for example, or let's use my account balance $100, and I want to risk. Let's say I want to risk $50. That is outrageous, but I just want to use it for example. Okay. Now I will select my instruments. XAU USD. All right. So it's here that I will now impute. Our analysis shows that we want to long. All right. So we click long. Long is another name for buy. Short is another name for sell. Okay. So we impute our entry price. Our entry price is 2724.68. Okay. So we impute our stop loss here. This platform also helps you calculate your pips automatically. 0.586. So we have 90 pips stop loss. Then our take profit is 2770. Okay, 0.2. So right now we've imputed the value. So we'll now click calculate. So right here, we have our instruments. You can see the position size. That position size, that is 0.05. That is 0.05. That is the lot size that we're going to use for this particular trade. Okay, so whatever lot size your calculation gives you here, that is where you will take to your MT5. Now, as I'm in my MT5, if I want to now place that trade, okay, click trade. I will now select the pair, which is XAU that I've calculated. So here I will now increase it to 0.05 lot size. Okay. Now the market is currently not at the price that we are entering, so we cannot use market execution. We cannot use market execution because the market is not at our entry. We will now use buy limit. We are using buy limit because our analysis says buy. Okay, so you will now come impute your entry that you used to calculate 2724.688. Then your SL according to your analysis 2715.586, and then your TP 2770.2. Then you click place. When you place, it will reflect on your chart that you've placed a limit entry. Look at it. Look at what it's displaying here. Buy limit 0.05. We have the TP, you can see the price. We have the SL, you can see that. So let's compare the take profit and the SL with what mass market shows us. So you can see that it's almost the same thing. Now, so that's for buy limits. If you want to enter at current market price, you can enter at current market price. That is if your analysis says so. All right. So when you enter a trade, you still come to your trade. You see that the limit is here showing. Now let's enter a market execution so that it will reflect that okay, we enter the trade. Let me just use a 0.01 lot size, the smallest lot, because gold is currently volatile and we cannot just enter a trade anyhow. I just want to use it as an example. So I entered the trade, I've executed the trade. You can see that it's showing here. All right. Now, to place my stop loss, you can actually place your stop loss here, the details of your stop loss and your TP here before you enter the trade. And you can do so after you enter the trade. All right. All you have to do is tap on it. You can see close position, modify position, new order. Close position, that is you want to close the trade entirely. Modify, maybe you want to edit your take profit or your stop loss. New order, you want to place a new trade. The charts, That is the candlestick representation of price. And then bulk operation. It's a feature in MT5 that allows you to close all your trades at the same time. If you open more than one position, okay? So let's go to modify position. All right. So let's assume my SL is 2750. So I can modify. I can modify my trade. So let's say my take profit is 2799. So you click modify. All right, you can see the representation here. So if the trade, if price comes here, it will take me out. If it goes against me, if price comes here, it will close my profits. All right. Even as you've entered them, you can still edit it. You can still go to the modify and change the figures. All right. So if you are here and maybe your pair, the pair that you want to trade is not here, all you have to do is click the plus button at the top right. Then you find your symbol. All right. Maybe it's silver. Then you tap on it and to be added. So that is how to place a trade using your MT5 in your live account. And of course, how to calculate your lot size. I've taught you that. Any pair that you want to calculate is not only gold. All you have to do is come here and there are several pairs that you can calculate, even crypto. So that is all for the session. I hope everybody understands what I've explained. Now, if I close this trade, the moment you close this trade now, I'm even lucky to close it in profits. It closed with profits. So if you want to see the history of the trade, you come to history. It will reflect here. The position will reflect here. So that's basically how to trade with your MT5. I think that's all for the session tonight. So that trade I closed, the value is going to reflect here in my broker. You can see that the figure have increased from 99.98 to 100.75. That means my profit reflected. You understand? So whatever you do in your MT5, the value will always reflect in your broker. All right, you can see the history of the trade here. I closed it. Okay. All right, that's all for tonight's session. If you have any question, you can ask your question.
Please, I have a question.
All right.
All right, thank you very much for tonight's class. It was enlightening. Okay, so now my question is this: that application that you showed us to calculate the pip size. Please, you didn't tell us, or maybe I didn't get it. The name of the application,
Okay,
please.
the name of the application is NAS Market. Look at it. NASH Markets.
Okay.
It's in your App Store,
NAS.
it's in your Play Store.
Okay, all right. Thank you very much, sir.
Yeah.
Okay. Good evening.
Good evening.
Yeah, so I went on Play Store to look for the app already, but it says that it's not available to me because it was made for an older version. So which other app can I download?
Actually, you can get lot size calculator. There are lots of lot size calculator out there. If you even check Google, you will see different lot size calculator. It is the same platform as I've explained it. It's the same way that you impute your figures. All right. This is just one of them.
Okay, thank you.
Hello, good evening.
Good evening.
Please, there is something I want to ask concerning how to calculate this our lot size. In crypto, sorry, I'm deviating. In crypto, how I trade it, like if I want to reach 50%, I have $100 capital, and I want to reach 50%, let me say 10% of my money. So in that lot size calculator, can I calculate exactly the with the lot size calculator give me exactly how much I'll be able to
Yes,
reach?
if your pair, the crypto pair that you want to use, I mean the one that you want to calculate is here. Let's say you want to calculate BNB.
Okay.
If it's here, all you have to do is impute the figure.
Okay.
But I hope you are not calculating lot size here to go and be placing in your crypto app. Is when you want to place it in your MT5. That's when you come here to calculate.
Okay. I'm
How you
sorry.
gonna calculate
Sorry, please. I have another question. Please, will you teach us how to take partial on MT5?
Okay, so if you want to take partials, make sure that you place the trade with more than.
I can't hear you. Please come again.
Someone is saying something. Okay, if you want to take partials with your MT5, you have to take a trade that is already that is more than 0.01 lots. Okay. So let's say I place a trade with 0.02 lots now, and I want to take partials. Maybe I took a buy. All right, and I want to take partials.
Okay.
All right. So you click it, click close position. So here, because it's 0.02, if I want to take partial, it's only 0.01 lot I can close.
Okay.
So when you close 0.01 lot, it will look below. You will see close with 0.4 profit. That is half of the profit because half of 0.02 is 0.01. Okay.
Okay. Yeah.
So close with the profit. So I have 0.01 lot size position left.
Okay.
So I've closed 0.01 lot already, and I have just 0.01 lot size position left. Do you understand what I just did?
Yeah.
All right.
Yeah. Thank you very much.
Hello, good evening.
Good evening.
Good evening, sir.
Please, I wanted to ask if you would show us how trailing stop works. I saw it when you were showing us about the market stop, market execution, and limit
It's
order.
trailing stop. Trailing stop is adjusting your stop loss as price moves. Okay. So
Okay.
if you want, you can always modify your stop loss as price moves towards your profits, your profit targets. All right. Let's say you enter a trade at $5 and your take profit is $10. Meanwhile, your stop loss is $4. Huh? If you don't want the market to now, if you want to now modify your stop loss, you can now move your stop loss maybe to your entry so that if price comes, it will close you at break even. or you can move your stop loss above your entry, so that if price goes against you, it will close in profits. All right. So it's
Yeah.
basically just moving your stop loss as price moves in your favor, because you cannot be trailing stop when the market is against you.
All right. Thank you.
Good evening. Good evening.
Good evening.
Yes. Sorry, please. I want to ask: is leverage the same buy powers we were being taught in crypto? I mean, leverage in forex is different from the one in crypto.
They are leverage is leverage. All right, it's the same. Leverage helps you to it increases your capacity to make more profits, and also to expose yourself. I'm sure that's
Okay.
what they taught you in crypto. It exposes yourself to a higher risk, just like it also increases your chances of profits.
Okay. So sorry, I don't know. You mentioned that in calculating the lot size without using the this thing, without using the lot size calculator. I don't know. Maybe in the next class, if you could just show us a bit of it.
Okay.
Thank you very much.
Yeah, good evening.
Good evening.
Yeah, sir, can you please explain margin? Hello?
Hello? Can you hear me?
Yeah, yeah. Can you please explain margin?
Margin is the amount that you deposit in your account now. The amount that you deposited with your broker that you want to use to open your position, or that you want to, the one that you want to use to place trade. Just like me now, I deposited $100 for this purpose. So that's my margin. Okay.
Okay, what about the free margin? Because on MT5 I can see free margin, margin.
My free margin. Oh, okay. This is what you mean. Your free margin when you enter a trade, it's a mathematical thing, all right? It's a complicated you have to be mathematically, when you enter a trade, you are buying a particular unit with a price. Okay. So now let's assume you bought a 0.01 lot with your $100. Okay. Now that free margin is telling you that this is the capacity that you can be able to buy with your remaining money outside your position already. Do you understand? So let's say if you go to, let's say you have 100 naira now, and you bought something with 20 naira, it will be remaining 18 naira, right? So you cannot use that 18 naira to buy something that is 100 naira. It has to be something that is within that capacity of 18 naira. Do you understand?
Yes.
Do you have any more questions? Good evening.
No. Thank you.
Good evening.
I'm hearing you, sir.
Yes, sir. So, can you explain what spread and swaps are?
Spread is the difference between your bid price and your ask price. All right. So let me open the chart now. As you can see the chart, you can see the red and the green. Okay. The red line and the green line. Can you see them?
Exactly.
So this spread is the difference between the bid, which is the buy, and the ask, which is the sell. So these two lines, they represent the sell and the buy price. Okay, so the difference between them is where your spread is. That's why different brokers have different spread for different currencies. And sometimes volatility can affect spread too. Volatility can increase spread because a lot of activities are going on at that particular time. Okay, so it's basically just you just subtract your bid from your ask.
Okay.
Or sorry, your ask from your bid, and you will get the spread in between. It depends on the broker. It's not constant for every broker
Okay.
and for every currency. What else did this I should explain?
No,
Spread and
that's
what?
just all. Spread and swaps.
Okay, swaps is the fee that your broker charges you when maybe you hold a trade to the next day. All right. So there is a fee,
Oh,
a transaction fee that your broker will charge you. All right.
okay, sir.
So
All right,
it will
that's
be
all.
deducted from your account. Any other question?
Yes, sir. I have a question. Good evening, sir.
Good evening, sir. Hello.
Hello.
Good evening. I'm hearing you.
Okay, sir. Please, what does equity stand for? Equity on that MT5. I could see equity and then account balance and co. That equity per se, what does it
Equity
stand
is
for?
equity. Your equity there is, you know that when you enter a trade, you have a running profit. All right.
Yes, sir.
Do you understand what I'm saying?
Yes, sir. Yes, sir.
If you enter a trade and maybe your trade is running in profit, now your equity is the addition of your balance and your running profits. Okay, but if you are in loss, maybe your trade is running in loss, it will now be the subtraction of the loss from your balance. That's what the equity represents. Okay.
Okay, sir. Thank you.
All right. Think I've answered everybody's question.
Please, I have a question.
Okay.
Good evening, Lex. Thank you for today's class. It was very much enlightening. And there is a term you use, volatile, like we are making reference to gold is volatile. Please, can you explain the meaning of volatile?
When you say a pair is volatile,
Yeah.
you are simply talking about like the swiftness, how quickly price moves in that particular time. Okay. There are sometimes that, like, that price fluctuates now. So how
Yeah.
quickly does it fluctuate? You know that there are sometimes that the spread will be moving really quick.
Yeah.
Especially if there's high impact news. So those kind of period, there's usually high volatility because of how quickly the spreads are moving. All right.
Okay.
Did that answer your question?
Thank you very much. Yeah. Button. Thanks.
Hello, good evening. Can you hear me?
Good evening.
Yeah, good evening, sir. Thank you for today's class. It was really inciting. I actually wanted to bring you back to the peeps. I didn't get some things you said clearly. Can you throw a little light on how to calculate your peeps?
Okay, I said the PEEP. If you actually everybody went through secondary school and everybody learned mathematics, all right? So what I'm saying is that
Okay.
in decimal Me, I did it with decimal. All right. We have, after the decimal point, I want to round it off. This stands for tens. Okay. This is thousand. This is tens of thousand. Okay.
After the decimal.
I mean, this is 100. This is tens. This is 100. This is thousand. So the first digit is tens. The second one is hundreds. All right. After
Please,
the
do you
decimal
realize
point.
do you realize that you're not sharing your screen again?
Oh, really?
Yes. You have not been sharing
Wow,
it since.
sorry. Wow, sorry.
And I think the recording session now stop.
Well, it's just question and answers session, so I don't think it should be part of. Are you seeing it now?
Yes.
Yes.
So, okay, let me go through that again. So I said you have a decimal point, okay? So we have 2, 3, 4, 5. Now, to round this figure after the decimal point, in the rule, you can go to Google and go and check. You will see the rule like this. For those of us that are very good with mathematics, you understand what I'm saying. We have, this is the first figure, tens, the second one, 100, the third one, 1,000, and the fourth one, tens of thousand. Okay, so now I'm saying that when you move this figure from your decimal points, we have 1, 2, 3, 4. I'm sure you're familiar with this. So we'll bring it out. Of course, it must start with 1. So 1, 2, 3, 4. So this is what you will use to now multiply the difference between your entry and your stop loss, or your entry and your take profit. So let's say our entry now is 48. No, sorry. Let's say our entry is 27.20. Okay, and our stop loss, well, let's say we want to buy. Okay, let's assume we want to buy a trade or want to sell. If you want to sell, of course, your stop loss must be greater than your entry, right?
Yes.
So we have, let's say this is our stop loss, and our entry is 26.40. Okay. So if we say that it's 26.40, now we are now dealing with 2 figures after the decimal, right? So we have 1, 2. So
Yes.
this one is now 10.
Sure.
Right? So
Yes.
first we will now minus 26.40 away from 27.20. So 27.20 minus 26.40, that's 0.8. Then we'll now multiply it with this 10 times 10.
Okay.
That will give us 8 pip. Do you understand what I just did?
Yes. I get what you did.
All right.
Well, thank you.
Okay. I'm already
Please, I have a
exhausted.
question.
Sir,
Please, I have a question. I have a question.
All right.
Should I ask?
Go on, please.
Okay, about this our PIP calculation of PIPs. You know, this thing is in a positive way and negative. Like we buy and we sell. So I don't know. You know, it's not something like I know. I don't know if you understand.
Yes,
I believe
understand.
that in some we are supposed to add up, while in some we are supposed to minus, something like that. Yeah,
It's
I don't know.
basically dealing with the higher value. Okay, the higher
Yeah.
value you subtract the lower value from the higher value. So if you are selling, are you listening?
Yeah.
If you are selling, you know that your stop loss will be greater than your entry, right?
Yeah.
Okay. So let's say we are selling from 6.40. Of course, our stop loss is going to be greater. So 60.80. 60.80 and 60.40. Which one is the higher value? So you bring the higher value up, bring the lower value down. But if you are buying, the lower value is your stop loss, right?
Yes. If I'm buying, yeah.
So if you're buying from 60.40 and the lower value 6.10, let's say that's our stop loss. All you have to do is minus it. You just have to bring the higher value up and subtract it from here. You just want to know the difference in pips, the pips in between your entry and your stop loss. Okay, so just bring the higher value up and the lower value down, and you will get what you're looking for. You just want to know the difference in pip. There's nothing complicated.
Sir,
Please,
I have a question,
I'm
sir.
already finished.
Sir, please, one last question, please.
Okay,
Sir,
please, the
is
last
all
question.
yes, please, is lot sizes the same thing across all currency pairs and crypto? For example, if you have one standard lot size, is it the same thing
Yes,
for
it's the
crypto
same.
too?
You know that 0.1 represents $0.1. It's the same thing. All right.
Okay.
As long as you are trading forex, it's the same. Because that's the lowest. Isn't that the lowest lot size? 0.01 lot.
So
For
yeah, I heard
currencies.
that there's
Even
volatility
commodities.
with crypto and all of that. So like it's different. Like the values will be different. So that's the part I don't understand. Especially with
Okay,
crypto.
I don't know if there are difference. The only thing I know is that they are the same.
Okay. Thank you.
All right, thank you guys. I've answered enough questions, please. You guys should let me rest. Thank you.
Thank you. Have a good night.
Good night. Good night, everybody.
Good night. That was interesting as well.
So I wanted to ask.
I won't finish the guy with questions.
Who also wanted to ask? At the episode, say he wanted to ask. Actually, remember small for still ask question.
So,
Make me calm down for you.
ask question.
We don't be calm down for this side.
No, I had to ask a question.
Okay.
Wait. Mona, wait. Like, answer this question. Wait. Specifically answer this question.
Oh, yeah, ask.
Like, he mentioned something about ratio. Like, ratio. Like, I don't really understand which thing they talk about ratio for when you open this thing.
Huh?
They
Like,
talk about
risk to reward
ratio.
Risk to reward ratio, Abi.
Yeah.
This, I think, like, can I answer you?
Yeah, sure.
Okay. Risk to reward ratio is when, let's say, you're entering a trade, right?
Yeah.
And let's say you place your. Let me just make an example. You enter gold now with a buy at 27.50. Let's say 27, and then you put your stop loss at 27.45. Right? So
The simple explanation is this. Let's say
Wait. Wait, let her explain first.
That would be
She dey go
Mona
long way.
allow her now. I dey enjoy the voice. I dey enjoy the voice. Mona allow her.
Mona, wait. This risk to reward ratio every year. Now the hear me.
Would they hear you?
Yeah.
Now the hear me.
Okay.
Okay. I see. Maybe Mona, wait now. Risk to reward ratio now. Maybe you want reach $2 now. They hear me.
Yeah.
We dey hear you.